As we enter 2025, it's clear that the global economy might be teetering on edge. What do I mean? Let's start with the elephant in the room, global debt. Think about this. Our global debt has exploded to a staggering $307 trillion. That's almost 4 times the total output of every economy in the world combined. Now, this isn't just about big, scary numbers. This is about the risk of a major financial storm. Governments and businesses alike are grappling with this mountain of debt, making hard decisions that could affect all of us. With interest rates on the rise and economic growth slowing down, the warning signs are impossible to ignore. What happens if the debt bubble bursts? I can tell you that it wouldn't be good, and it would affect all financial markets worldwide. Today, we'll explore how our global economy is being shaken up and why it's vital to pay attention right now. Now, let's break down another critical piece of the puzzle, inflation. Remember back in 2022 when interest rates hit a sky-high 9.1%? While things have cooled down a bit to around 3%, but we're still not in the clear. The Fed aims for a sweet spot of about 2% inflation, but we're still a little ways off. Here's the dilemma though. Central banks could tighten the money supply to fight inflation, but this could also slow down the economy too much, almost like stepping on the brakes too hard. Every decision they make trickles down to affect us all. How much we pay for groceries, the stability of our jobs, and even the global markets. Also, keep in mind that as the Federal Reserve lowers interest rates, it doesn't automatically mean our interest rates for borrowing and mortgages go down. No, this is set by the market, specifically the 10-year Treasury notes. And that's exactly what's happening right now. The Fed is lowering interest rates, but borrowing costs are moving up. Have you noticed that? Do you see how that's a problem? By the way, the 10-year Treasury just hit over 5%. Basically, this means higher borrowing costs for everyone. Technological disruption. It's a phrase we've been hearing a lot about recently, but what does it really mean for us? Did you know? By 2030, the global AI market is projected to reach an astonishing $1.8 trillion. That's probably a conservative estimate. But this growth isn't just about new gadgets and smarter phones. It's about a fundamental shift in how industries operate. And think about it, where do human workers fit into this new tech-driven equation? Diving into the numbers, automation could potentially displace up to 800 million jobs by 2035. Sectors like retail, finance, even accounting are already on the front lines of getting disrupted or being replaced by AI bots. This is already shaping our work landscape, and this raises a massive question. Will AI propel us to new heights of efficiency, or will it push many of us out of jobs? To me, this is a big challenge, but to others, it could be an opportunity to adapt, to learn, and to rethink how we work and do things. Forward-thinking entrepreneurs are doing incredible things like creating AI-generated music that's disrupting the music industry. For example, check out this channel, AI Music Puppy. They're dedicated to AI-produced music, and it's scary good. Check it out.
Bassline's here, gonna make you move. Got that groove, gonna make your body groove. Lights down low, feeling the heat in the club, dancing to the beat.
Pretty cool, right? So as we explore the ramifications of AI and automation, we see that the push towards technological progress isn't just reshaping our job markets, it's also intensifying our demand for natural resources. One striking example is Bitcoin mining, which consumes enormous amounts of energy, raising significant concerns about sustainability. And this brings us to another critical point of discussion: resource scarcity. In the United States, this isn't something we normally think about because we pretty much have everything we need. But if you expand outwards with a global perspective, the economic landscape of 2025 gets really concerning. Because this isn't just about running out of luxury goods. This touches the very essentials of human survival: water, food, and energy. Did you know that this year, nearly 2.8 billion people are expected to live in areas with severe water stress? Think about that for a moment. That's almost 1/3 of the global population grappling with a shortage of one of life's most essential needs. This scarcity doesn't just mean less water to drink, it affects agriculture, industry, and even energy production. The ripple effects are massive, driving up cost and could potentially spark conflicts over resources. Resource scarcity also pushes up prices for food and energy. As water becomes scarcer, the cost of producing food climbs, which in turn can lead to higher grocery bills. Similarly, energy production often depends on water and other natural resources that are dwindling. This leads to higher energy prices, affecting everything from how much we pay for electricity to the cost of heating our homes. Where I live, Nicor Gas just announced they're increasing natural gas prices by 20%. I live in the greater Chicagoland area, but if you zoom out, this is happening everywhere. So how do we respond to these challenges? There are innovative solutions and strategies being developed, from advancements in water conservation technologies to new farming methods that use less water and yield more food. But will it be enough? As we look deeper into the economic forecast for 2025, it's important to look beyond our local economies and consider the global shifts that are reshaping our world. Significant growth is happening outside the traditional powerhouses. Take India, for example, which is projected to become the 4th largest economy in the world by 2025, surpassing Germany with an economy worth $5.5 trillion. This isn't just a shift, it's a seismic change in the global economic balance. As emerging markets like India and others gain economic strength, they bring new opportunities and challenges to the global stage. As these emerging markets grow and technology continues to reshape industries, we also see heightened volatility and often bubble-like asset prices in various sectors, from the housing market to the stock market, and notably cryptocurrencies. These inflated values pose risks of unaffordability and even major market corrections. Meanwhile, China continues to expand its influence through the Belt and Road Initiative, forging new trade routes and partnerships across Asia, Africa, and Europe. This vast network not only reshapes global trade, but also shifts geopolitical alliances and economic dependencies. As we've explored, the economic landscape of 2025 is filled with both challenges and opportunities. From the looming global debt crisis, inflated asset prices, to the tech advancements like AI, and the shifting dynamics in emerging markets, it's clear that the future will demand much from us all. It'll be an interesting year to say the least. So what's your take on the economic outlook for 2025? Are you feeling optimistic, cautious, or something else? I want to hear from you. Please share your thoughts with me in the comment section below. I'd love to start a conversation about how we can all better prepare for the changes ahead. If you found this video insightful, please do me a favor and hit that like button and consider subscribing to stay connected. And remember, staying informed is the key to not just surviving, but thriving in this challenging economic environment. Thanks for watching, and see you in another video.